out? Do you see the cost rising? Do you see them revising interest rates on deposits, or how do you expect this to play out for the system?
Number one, seasonally, I don't think it's a bad number at all, because you see that there is always some perk-up in the current accounts in the fourth quarter, the end of the year. That typically tends to wean off a bit by first quarter. This is what has happened. So you will see that your current accounts would have fallen sharply. That's no surprise. In terms of overall outlook for the industry, we expect that the deposit rate should now be pretty stable after a very sharp rise in first half of FY24 and latter half of FY23. I think the deposit rates are now stabilizing. We don't expect a very sharp rise here at this point in time.
Okay, in that sense, Kaitav, let me ask you then, since we're going to be hearing from the State Bank of India management very shortly, what are some of the key things that you're going to watch out for? What are the details that you're going to be looking for in their commentary?
Apart from LCR impact, which is going to be transitionary in nature, because it will impact the entire banking sector, I would look for the credit growth and what are the drivers of the credit growth. And B, I would also look at the NIM outlook over the next two years, because sustainability of ROA and then improvement for thereof will drive the re-rating.
Okay, ROA for State Bank of India at 1.1% for the first quarter, ROE at 20.98%. Kaitav, quickly, your thoughts as well. What would you like to hear?
Hello.
Kaitav, if you can hear me.
Yeah, I said I would like to hear more on the credit growth, components of credit growth, the NIM outlook, and also how comfortable they are on the capital front.
Sure, got that. Ashutosh, I meant to ask you, what will you be watching out for in the commentary from the chairman shortly?
So the commentary will be my more focus toward the deposit part of it, how the deposit growth trajectory will be there, and on loan growth, will they able to achieve 15-16% of the growth in this year, given the current economic scenario out there. And now the OPEX front, we like to hear that what will be the run rate going forward for this year, because we are expecting a major lower OPEX for this year.
All right. Let me quickly ask both of you gentlemen before we take a break on what you expect in terms of a stock reaction on Monday. I think, Kaitav, you alluded to the fact that, perhaps this may not move the stock much. But what is your expectation on Monday? What should we expect to see? Okay, I think we don't have Kaitav at the moment. Ashutosh, what is your sense on the stock reaction that we should expect on Monday?
So we do not expect any major reaction on the stock on Monday because this is on expected line, apart from the slippages number, which can be a discussion point, and given every bank is reporting and SBI has also guided it for. So there is no negative surprise as such, and the rest of all depend upon the commentary. If anything comes in the commentary, that can have an impact on the stock price. Yeah.
Well, yes, we will be watching out for any guidance that the bank has to give on improvement on some of these ratios, whether that is LCR, whether the impact on those guidelines, whether that is deposit accretion, the asset quality going forward, the recovery is picking up, and so on. But we'll take a short break, gentlemen. Do stay with us. We'll be back in just a moment.
MD Finance, other DMDs and senior officials to this conference. We appreciate your presence here at the conference today. We will now begin this media briefing. To do the honors, I request our chairman, Shri Dinesh Karasa, to address the media and shed light on the bank's financial performance for Q1 of financial year 25.
Thank you very much. I hope I am audible to all. ठीक है क्या? Am I audible? Yes. Very good afternoon to all of you. Thank you very much for taking out time and joining the press meet today, particularly on a Saturday afternoon. At the very outset, I would like to thank all our stakeholders, including our customers, shareholders, employees, and all concerned for their support and helping us in creating sustainable value not only for the bank but also for the economy as a whole. I will first start with a brief description of the present global and domestic economic scenario and will then discuss the bank's performance. In the last few months, global economic activity appears to be strengthening across advanced economies and emerging market economies. Global trade is gathering momentum, inflation is approaching targets, but the pace of disinflation has somewhat slowed down. Central banks are closely monitoring the growth trajectories, employment and labor market outlook and price trends, with the US Fed expected to have a 25 basis point cut in September 24. As far as domestic economy is concerned, second quarter of financial year 25 has begun with gaining growth momentum. The benign monsoon pattern and its accelerated spatial distribution of late should smoothen the inflationary expectations in the medium term. Latest numbers show that scheduled commercial bank credit growth by 14%, while deposit grew by 11.3% for the third consecutive year till now. The credit growth has been higher than the deposit growth. New investment announcements, which were around 10 trillion during 2021, has improved to more than 37 trillion in the last 2 years, 23 and 24. Major industries where new announcements have been made include non-renewable energy, electronic, renewable, basic metal, inorganic chemical, and the real estate, particularly the residential buildings. The union budget announcements are positive for the market. The thrust to consumption revival, PM Suryaghar Muft Bijli Yojana, PMAY Urban, MSME, and startup agriculture will go a long way to boost the Indian economy and also enhance the infrastructure investment in the economy. Coming to the bank's performance, we have once again delivered excellent numbers. I am happy to share that our net profit for the Q1 of financial year 25 is at 17,035 crores and shows an increase of almost 0.90% over Q1 of financial year 24. Operating profit at 26,449 has witnessed an increase of almost 5% on a YOY basis. Bank continues to report ROA of greater than 1, which is at 1.10 for the Q1 of financial year 25. The ROE of the bank for Q1 of financial year 25 is at almost 21%. The cost to income ratio of the bank is now at 49.42% for the Q1 of financial year 25 and shows an improvement of 95 basis points over Q1 of financial year 24. Net interest income for Q1 financial year 25 has increased by 5.71% YOY on the back of improvement in yields and continuing credit offtake. Operating expenses have increased marginally by 0.65% YOY. We believe sustaining our profitability at these levels highlights the resilience of the underlying value drivers of the bank. Our deposits have grown by 8.18% YOY and term deposits have grown by 12.20% YOY. CASA deposits have grown by 2.59% YOY, and we have taken several steps to strengthen our liability franchise. I am pleased to advise that the credit growth continues to be robust across all segments. Our domestic advances have grown by 15.55%, and the retail, agri, MSME advances have crossed 21 trillion during Q1 of financial year 25. Out of the above, retail personal advances constitutes 13.7 trillion, agri advances at 3.09 trillion, and SME advances at 4.43 trillion, growing at 13.60, 17.06 and 19.87% YOY respectively. The corporate segment is also showing healthy growth at 15.92% YOY. Our foreign offices have continued to perform well, and advances have grown at 14.41%, and deposits in the foreign offices have grown at 10.48%. Our liquidity position is comfortable, with the liquidity coverage ratio being at about 129% as on 30th June 24, which is well above the regulatory benchmark. The domestic CD ratio is at 69.28%, indicating significant cushion to grow our credit portfolio. I am happy to share the progress we are making in the digital banking. Almost 8 crore customers have been registered in YONO, driving digital agenda of the bank. 63% of the regular savings bank accounts were opened through YONO in Q1 of financial year 25. YONO business has gained significant traction, with more than 29 lakh users having registered till now. We are now leveraging analytics with significant business of almost about 25,000 crore during the Q1 of financial year 25. As regards asset quality, our gross NPA ratio has improved by 55 basis points YOY and stands at 2.21% as on June of 24, and continue to be at its lowest level in more than 10 years. Our net NPA ratio has also improved by 14 basis points YOY and stands at 0.57%. Slippage ratio for Q1 of financial year 25 has improved by 10 basis points and stands at 0.84%. We have a well-provided stress book and PCR including OCA standing at 91.76%, and PCR excluding OCA is at 74.41%. Here I would also like to mention that during the quarter post June 30th till now, almost about 1,600 crore plus have been recovered out of the slippages which we had seen as on 30th June. Capital adequacy, the bank has remained very well capitalized, and we have sufficient headroom to take care of the normal business growth requirements. Our capital adequacy ratio stands at about 13.86%, with CET ratio at 10.25%. Without considering the clawback of the profit, both the ratios are well above the regulatory requirement. And the fact remains that even today, with this kind of a capital, we can easily support the balance sheet growth of almost about 7 trillion without any hassle. Our subsidiaries are also consistently performing well and continue to create significant value for all the stakeholders, and most importantly for the customers. We will continue to nurture these subsidiaries and see them creating value for their own shareholders as well as the shareholders and the customers of SBI. To conclude, I would like to thank you all once again for your support to the bank. The bank, while pursuing its own progress, contributes to the progress and growth of the economy. We remain committed to rewarding your trust in us with superior sustainable returns over the long term. My team and I are now open to taking your questions. Thank you very much.
Thank you so much, sir. Now we move to the media question and answers. To ensure seamless flow of the session, we will move from my left to right so that everyone given a chance to ask a question. We request you to please follow the format and restrict yourself to 2 questions focused on the result. If time permits, we may repeat the circuit for a detailed question. We may begin from Ankur.
Hi, Ankur Mishra from ET Now. Your loan loss provisions have been elevated 70% YOY and 37% QOQ. What has been reason on that front? And apart from that, I also see credit cost as well as slippage ratio. There is an increase QOQ.
Well, I think as far as the first quarter is concerned, it is always a unique quarter, and it should be seen on a YOY basis and not on the QOQ basis. This is one submission which I would like to make. And your other issue which you have highlighted in terms of the loan loss provision, which is on the higher side, well, we don't have any challenge. First of all, let me just clarify that. When it comes to our credit cost, it is at 0.48, but still it is much less than what we have already given the guidance over the years. I think when it comes to slippages, even slippages ratios have come down by almost about 10 basis points on a YOY basis. So I think I would also like to mention that out of 7,900 crore worth of slippages, we have already recovered almost about 1,600 crore after June 30th. And if at all you will look at the slippage ratio over the period June 22, it was 1.38, June 23 it was 0.94, and now it is at 0.84. So that very clearly reflects that there is no challenge as far as our asset quality is concerned. Well, and as far as loan loss provisions are concerned, just one sec.
Fresh slippage and aging provision.
Actually, part of it is also attributed to the aging provision for the standard assets also. And since our balance sheet is growing, so that's why we are required to make provisions for that, for the standard assets also, and that is the reason why we have seen this kind of a growth.
Next question is from Ekta from Z Business.
गुड इवनिंग सर। सर मैं आपसे ये पूछना चाहती हूँ कि अभी आपने बोला कि डिपॉजिट ग्रोथ जो है, क्रेडिट ग्रोथ जिस तरह से बढ़ी है, डिपॉजिट ग्रोथ उस तरह से नहीं बढ़ी है, तो ये एक चैलेंज बैंकिंग सेक्टर में हम देख भी रहे हैं। तो अभी जो आरबीआई का एलसीआर पे ड्राफ्ट सर्कुलर आया है, उसका भी आप कितना इम्पैक्ट देखते हैं, क्या ये चैलेंज बढ़ने वाला है?
देखिए, अभी ड्राफ्ट सर्कुलर आया नहीं है, इट्स ए कंसल्टेशन पेपर ओनली, और कंसल्टेशन पेपर के रहते इट हैज गिवन अस एन अपॉर्चुनिटी कि हम जो है आरबीआई को अपने व्यूज इस बारे में बता पाए। तो आई थिंक इस बारे में ज़्यादा बात तो अभी नहीं करेंगे, लेकिन जहाँ तक आपका दूसरा पहला सवाल जो था कि जो डिपॉजिट ग्रोथ, देखिए डिपॉजिट ग्रोथ इज वन एस्पेक्ट, बट एट व्हाट रेट आर वी ग्रोइंग द डिपॉजिट प्राइस इन टर्म्स ऑफ कॉस्ट ऑफ डिपॉजिट. So we have to be very mindful, and since we have ensured that when nobody was picking up deposit, we picked up the deposit, we put it into the investment book, and today we have got a comfort available, and that is something which has given us a leeway in terms of almost about 3.70 trillion. We have got the excess SLR which is available to us, and that is helping us in terms of ensuring that we feed our loan book growth without incurring any extra cost, and that is actually getting reflected in our NIMs also. Though if at all we will look at our term deposits, our cost of deposit has gone up by almost about 50 basis point, 45 basis point to be precise, but when it comes to our NIM, it has only come down by about 11 basis point. So this is very clearly reflected that we are making an optimal choice in terms of at what price we should raise the deposit, but at the same time, while I'm saying so, we are very mindful in terms of the deposit franchise. We must not compromise the depositors' interest, and that is the reason why in certain buckets we have already increased the interest rate for the term deposit. And also I must also mention that invariably we have seen that when there are alternate options available in the as far as allocation of savings are concerned, people have a choice. They want to go to markets, they have gone to market, but primarily the bank deposit remains the channelizing source for all that. So I think and we have also looked at the past data. I must also mention that way back in 2010-11 we had a similar situation where the loan book was growing much faster than the deposit book, and that was a point of time. We have seen that in the past also we have witnessed this situation. This is not something which is going to be there forever. This is a temporary phenomena. Hopefully we should be in a position to navigate with our excess SLR, but even if otherwise, we have already raised about 20,000 crore worth of our infrastructure bond, and which we could raise at a very competitive price. Now we have also opened our CD book, which is about 50,000 crores CD program, which we have already raised, and there also we are in a position to raise that deposit at very competitive rates. So I would only like to highlight, raising deposit in absolute term, at what cost and price you are raising the deposit, one should not lose sight of that. Thank you.
Next question is from Shipra from the Informers.
Good afternoon, sir. This is Shukla from Informers Media. I have two questions. My first is, I just want to understand how much more are you planning to increase your MSME book now that you've launched your MSME Sahaj program as well. That's my first question. And the second one is relating to the deposit rates. As you said that you've already increased your deposit rates in certain buckets. So how much will you be keen on increasing those rates further? And
Now we will be actually evaluating the situation from time to time. When we meet in our ALCO, we take the comprehensive view of the situation obtaining at the material point of time, and accordingly we take the call. Your other question relating to how much we will grow in MSME, we perceive that there is a decent opportunity which is available in MSME. If at all we can find the right risk which is according to our risk appetite, we will be happy growing into MSME's book. We have not put any kind of a upper ceiling. This is the second quarter when we are growing in the MSME at 20%. So I think, so long as the risk appetite, risk which is available is in sync with our appetite, we have got no challenge in supporting MSMEs.
And digital MSME program.
And also digital MSME which we have introduced. We have come out with a BRE model which is from 5 lakh to 5 crore, and it has actually helped us in terms of assessing the MSME while we are really carrying out the appraisal itself in the digital form. So that is something which has helped us in terms of improving our delivery for the MSME also.
Next question is from Ram Kumar of Hindu Business Line.
Corporate book seems to be growing pretty well actually compared to the retail loan book.
Yeah.
Is there any kind of change in tack actually as far as loan growth is concerned? Are you trying to slow down your retail book, or some unsecured loans you are trying to?
No, see, the point is that post increase in RWS by RBI on the unsecured book, we have to, when we go for the portfolio choice, we have to keep in mind what is the RWA, and we have seen decent traction coming in from the mid corporates. So that is the reason why we are in a position to grow our loan book well, and actually that is growing almost at about 20% as far as the mid corporates are concerned. So that is the reason why when it comes to choice of portfolio, we have calibrated our retail unsecured loan book, which is our personal loans and our pension loans. But yes, of course, there is a huge opportunity, but we want to ensure that we should be in a position to earn a decent earning as far as the portfolio is concerned. So we keep on calibrating this kind of effort.
And you also mentioned that your current level of capital adequacy is good enough for supporting normal growth. So
yes.
You can tell us what is a normal growth?
We can easily grow it to the extent of about 6.5 to 7 trillion.
6.5 to
7 trillion.
Okay. Thank you, sir.
Next question is from Hamsini from Money Control.
Hi sir, if I look at your CD ratio at 69.8%, to 8%, sorry, it's much lower compared to the average that PSU banks also have. So is it that your liability book is repricing faster, which is what is weighing on your NIMs at this point in time? And just as an add-on to that, do you foresee a point where in FY25 you can start seeing NIMs go back to where we were in 23 or something, or a little more fall in pace of NIM reduction?
Well, I think as far as its effort is there to protect the NIMs as much as possible, and that is the reason why, despite the increase in the average cost of deposit, you have seen the NIMs coming down only by 11 basis points. So that will be our strategy going forward also. So when it comes to repricing of the book is concerned, I think the fixed deposit, which is the term deposit, which are in 1 to 2 year bracket, that is something which is the maximum component of our term deposit, and that we had increased about 6 months back.
Twice we have increased, sir.
Twice we have increased.
And we have come up with a new scheme also.
So we have already come up with the new scheme, but I think to my mind, it should not have very significant impact. We should be, because every time we increase our term deposit, it gives us elbow room for increasing our MCLR also.
Yes.
So that is something we are in a position to attract, to balance both the things. So I think hopefully the kind of strategy which we have followed all this while, which has helped us in protecting the NIMs, we should be in a position to protect our NIM, and if at all it has to come down, we should try and see that it should come down the minimum possible.
So can I assume the worst case NIM will be somewhere in the ballpark of 3.05 to 3.1?
No, I don't think so. It should come down. My expectation is that we should be in a position to operate between 3.2 to 3.4. because domestic NIMs are even today at about 3.35. So when it comes to overseas, if at all, bank as a whole we are at 3.22, but domestic NIMs are actually at 3.35. So we should be in a position to operate around that.
Thank you, sir. The second question is with respect to your ATM deployment. That's fallen from about 65,000 units to 62,000. Is there any particular reason why you've scaled back on ATM? And
no, we were in the process of upgrading the ATMs, and almost about 7,000 odd ATMs are to be upgraded, and we have already brought in about 1,500. So the remaining are also on the way, and we should be in a position to ramp up almost to the same level.
Where do we stand on YONO 2.0, sir?
YONO 2.0, we are almost in the process of upgrading and should be launching our beta launch also. But YONO 2.0, you may not get to see it in one go. This is more incremental in nature, and if at all you would even now also experience YONO, there are many capabilities which have already introduced, and that is one of the reasons why the performance of YONO, touch wood, is excellent.